Welcome back, everyone. Today we're diving into the world where tangible assets meet blockchain. Real-world asset tokenization. A game changer that's redefining how we think about ownership.
Absolutely. It's like taking assets you can touch, real estate, fine art, even commodities, and turning them into digital tokens that you can trade 24/7.
Exactly. Tokenization basically means converting rights to an asset into a digital token on a blockchain, which gives you transparency, programmability, and fractional ownership. It opens up the market in a way traditional finance just never did.
Right. And it's interesting how, unlike the usual crypto hype around memecoins, this is about solving genuine market inefficiencies.
Yup. I mean, consider illiquidity in real estate or the high barrier for entry in premium assets. Tokenization lets investors own a piece, sometimes starting with as little as $100, while also making the overall market much more liquid. It's like unlocking capital stuck in assets you thought you'd never be able to touch.
And the scale is impressive too. I read estimates suggesting that by 2030, tokenized assets could represent as much as $16 trillion, with shorter-term figures already hitting the multi-trillion mark.
Absolutely. Those numbers coming from heavy hitters like Boston Consulting Group and Citi really show that we're not just dealing with a niche technology, we're witnessing a serious financial transformation.
Yeah.
It's reshaping the whole idea of asset trading.
Now let's talk regulation. It's almost ironic. The clearer we get on legal guidelines, the more institutional players are warming up to tokenization, right?
Definitely. Institutions need certainty. And regulators are finally stepping in. We're seeing the SEC, the EU's Markets and Crypto Assets Regulation, and Singapore's Payment Services Act all provide a framework for tokenized assets. This clarity is what's fueling mainstream adoption.
It almost feels like regulations, which used to be seen as the enemy of crypto innovation, are now the hero enabling it.
Exactly. And that's a key shift. Before 2023, it was a grey, uncertain area, but now specialized legal frameworks are emerging in major financial centers. Switzerland, for instance, has its digital assets law that clearly defines how token ownership is legally transferred. That's a real milestone.
I've also noticed places like Hong Kong and even the UK starting to play with regulatory sandboxes to safely test tokenization projects, which is really promising.
Yes, and this new wave of clarity has paved the way for institutional giants. Look at JPMorgan's tokenized collateral network, BlackRock's experiments, and even Goldman Sachs dipping their toes into digital asset platforms.
Totally.
They're not doing this as a side project. They're building core infrastructure for the future of finance.
Speaking of core infrastructure, the market's maturity is another critical factor. Investors are no longer chasing quick gains from memecoins. They're looking for true, sustainable value.
Right? That shift from the number go up mindset to asking, what problem does this solve, is huge. Tokenization is making assets that were once locked up in inefficiencies, like sluggish real estate closings and paper-based transfers, move at the blink of an eye. That redefines liquidity and efficiency. And
exactly. But if I might interject, a small critique here. Some of these regulatory setups still lag in truly handling cross-border nuances. Don't you think there's still a risk for misinterpretation or gaps in legal enforceability in different jurisdictions?
Absolutely, and that's a really good point. While the frameworks are evolving, challenges remain, especially when dealing with assets scattered globally. Yet, the fact that bodies like the Uniform Law Commission are already drafting model legislations shows progress.
Indeed.
It's a work in progress, but a promising one.
Right. Progress sometimes comes in incremental steps. Moving on, what about the technological side? The old, slower blockchains simply couldn't handle real-world finance, but now we have Layer 2 solutions, like Base and Arbitrum, Avalanche and Polygon, creating fast, cheap transactions.
Yup, technology is the backbone here. High gas fees and slow transactions on older networks made tokenization impractical. Now, with these newer, more efficient blockchain protocols, transactions happen in seconds, sometimes for mere cents. It's revolutionary when you think about it.
And don't forget the rise of specialized financial blockchains like Corda and Hyperledger Fabric, which are built with privacy and regulatory compliance in mind.
Exactly. Pair that with robust custody solutions and Oracle technologies from companies like Chainlink, and you see the entire ecosystem coming together. It makes tokenization more viable across almost every asset class.
Speaking of asset classes, let's dig into some specific examples. Real estate tokenization, for instance, is such a clear demonstration of the benefits. How do you see that impacting the market?
Real estate, historically very illiquid, is transformed when fractionalized. Instead of needing hundreds of thousands to millions to invest in a property, you get small, manageable pieces that anyone can trade.
Right.
This means liquidity for assets like commercial buildings is dramatically improved, and investors finally have the flexibility they've long craved.
Not only that, but operational efficiencies kick in. Imagine closing a deal in minutes rather than 30 to 60 days. That's a drastic reduction in friction.
Exactly. And it's not just residential property. Major developers are even tokenizing office spaces and retail centers, sometimes integrating decentralized governance where token holders vote on operational matters like renovations or tenant selections. It's turning passive assets into interactive, value-generating platforms.
And then we have the debt markets. Tokenized bonds and even sovereign debt are coming online, streamlining interest payments and making ownership transparent in ways traditional finance has struggled with.
Right. Think about it. Automatic bond payments and transparent ownership on a secure blockchain make for a much smoother, cost-efficient process. ING's research even shows cost reductions of up to 50% on tokenized debt issuance. It's clear that tokenization isn't just about art or houses. It's fundamental financial instruments too.
On top of that, commodities and natural resources like gold and oil, and even water rights, are being tokenized. That not only cuts down on the storage headaches, but also boosts transparency and liquidity in markets that were once very opaque.
Absolutely. Tokenized commodities solve many of the custodial and verification issues traditional markets have faced. Instead of relying solely on paper certificates, blockchain provides transparent, tamper-proof digital records.
Exactly.
It's a whole new level of trust.
And let's not overlook tokenized art and intellectual property. Creative assets like fine art, music catalogs, and even film rights are opening up new investment opportunities, while also safeguarding provenance through immutable blockchain records.
Right. Auction houses are even experimenting with splitting multi-million-dollar masterpieces into tokens, allowing broader access to high-value art. It's like democratizing culture and investment at the same time. And that's a win for both creators and collectors.
Now, when we bring these tokenized assets into the DeFi space, things get even more exciting. Imagine using tokenized real estate or bonds as collateral for loans or yield-generating strategies.
Exactly. The composability here is phenomenal. Integrating traditional financial assets with decentralized finance creates new financial primitives that enable automated market makers and lending protocols. It's blending the best of both worlds.
Yes, but we should also note that challenges persist. The Oracle problem, for instance, ensuring that real-world data securely lands on-chain is still a significant hurdle.
True, but exciting innovations like multi-source data verification and cryptographic proofs are already addressing that. Custody solutions have evolved too, thanks to regulated digital custodians and advanced multi-party computation systems. The ecosystem is continuously adapting.
And scalability, too. Blockchain congestion used to be a serious issue. But with Layer 2 scaling and improved consensus mechanisms, we're witnessing seamless, fast transactions that keep up with growing demand.
Exactly. This improved efficiency is what's ultimately lowering the barrier to entry for both issuers and retail investors, effectively democratizing access to investment opportunities that were once reserved for the ultra-wealthy.
That's transformative.
It's shifting wealth creation into a broader, more inclusive arena.
It's pretty amazing how what started as a technological curiosity has evolved into an enabler for global capital markets, making it possible for someone in one part of the world to invest in, say, New York real estate or European art markets.
Precisely. And looking ahead, I see the future where assets are issued as tokens from the get-go, rather than being tokenized after the fact, because the operational and liquidity benefits are just too compelling to ignore. It's like a whole new financial infrastructure being built right before our eyes.
And don't forget the interplay with technologies like AI and IoT, which could further automate asset management and valuation. Imagine AI systems dynamically managing portfolio risks in real time based on on-chain data.
That's a future that's both thrilling and, a bit challenging to fully imagine. But one thing's for sure, the convergence of regulation, institutional interest, robust blockchain technology, and DeFi integration is setting the stage for a financial revolution. It's the reimagining of ownership itself.
Absolutely. And while there are hurdles to overcome, the potential upside, greater liquidity, cost savings, and democratized access is enormous.
So whether you're a traditional investor or a tech enthusiast, this tokenization trend is something to watch closely. It's not just a fad, but an evolution in how we understand and interact with assets globally. It's a fundamental reworking of financial systems.
As always, it's exciting to see how these developments will reshape the market. There's a lot to learn from and plenty of innovation on the horizon.
Absolutely. Thanks for tuning in today. As we say, the future of finance is literally being built one token at a time. Until next time, keep questioning, keep exploring, and remember, the transformation is just beginning.